Good evening. This is the post-market recap by AGI Era. Today is Friday, December 26, 2025, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's quiet but telling session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a market largely on autopilot, drifting through the holiday week. The S&P 500 finished the day slightly down by about 0.03%, settling at 6,929.94. Technically, the index continues to flirt with all-time highs, but remains just below the significant psychological 7,000 level. The inability to decisively break out suggests traders are waiting for a catalyst in the new year. The Nasdaq 100 also drifted lower, closing 0.05%, at 25,644.39. The Dow Jones Industrial Average finished down by about 20 points. Crucially, trading volume today was significantly lighter than average, a hallmark of the holiday season. This implies that the minor moves we saw today lack long-term conviction. This wasn't institutional maneuvering, it was a market treading water. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 12.4. The VIX remains subdued, which tells us there is very little hedging or outright fear present. This suggests the market is in a holding pattern, not anticipating any imminent shocks. We are seeing a clear lack of conviction in sector performance. Money flowed into technology, which was up 0.15%, while the defensive utilities sector, XLU, was down just 0.07%. This extremely tight spread between a growth sector and a safety sector tells us that investors are making very few decisive bets, preferring to wait on the sidelines as the year closes out. The macro engine room. The primary driver of today's minimal moves can be traced back to the currency markets, as the bond market was exceptionally quiet. The 10-year Treasury yield settled at 4.31%, holding steady on the day. With bonds not providing a clear direction, traders looked elsewhere. Meanwhile, the U.S. dollar index is ticking up slightly to 97.69. This move is significant because it comes amid ongoing chatter from Japan about potential currency intervention to support the yen. A stronger dollar creates a headwind for U.S. multinational corporations by making their exports more expensive. Crude oil is trading lower around $56.96 a barrel, reflecting concerns about tepid industrial demand signaled by weaker-than-expected factory output data from Japan. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech showed some notable divergence. NVIDIA finished the day up 1.02% at a 130.50 fest, showing resilient strength. However, Microsoft closed slightly down, while Apple also ticked lower. The weakness in other megacaps is notable. Meta dropped 0.64%, and Tesla was a significant laggard, falling 2.1% to 475 don'ts. This divergence within the top tech names reinforces the theme of a market without a unified direction, driven more by individual stock stories than a broad macro trend today. After hours and look ahead. Looking at the after-hours tape right now, shares of ECD Automotive Design (ECDA) are surging more than 29% in post-market trading, a significant move on what is otherwise a very quiet evening. As we pivot to next week, the economic calendar remains light. The main focus will be on portfolio rebalancing as major funds close their books for 2025. Investors should specifically watch for any unusual volume spikes in the final trading days of the year, as this could signal institutional rotation that will set the tone for January. This wraps up a quiet week. The key takeaway for your weekend strategy is to recognize that the market's character has been defined by low-volume holiday trading. Don't read too much into the small dips or pops. The real test will come in the first full week of January, when institutional players return in force. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer, this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.